following is a presentation of TFNN.
Welcome, folks. This is Tom O'Brien filling in for Steve. We appreciate you growling and prowling with us out here. Right now, you got the E-minis down 5. You get the NASDAQ off 12. S&P's gold is down 880. That just tested the low of 2 days ago, rejected that low. We'll walk you through that. Silver getting whacked. That's down 28 cents at $17.42. You get platinum off 10 at $13.08. The oil contract is up 54 at 93.34. Bonds, the ever-ready bond market, folks, just won't stop. You got the 10-year up 7 ticks at 124.16. 30-year up 17 ticks at 137.12. And King Dollar, check it out. King Dollar's up 305 ticks at 85.46. The euro is down 55, and the yen is trading up 15 at 109.19. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of the futures, this is going to get really interesting, and this is what it is. You had the bounce out here yesterday in the NYSE bottom line, S&Ps. You went to a lower low, higher volume. That means you're going to be right back down there. We got the first sell out here this morning. We were up to the 1991 area. Right now, you're at 1986. It's going to need more juice on the downside. It was a small sell. Bottom line, we'll see how this flies when the market's open. King Dollar. Let's go right over to King Dollar because King Dollar is the number here. And King Dollar, we also just got the first actual sell that is on a 10-minute basis, DXZ4. That, you know, we'll see if, in fact, there's any follow-through on this. So King Dollar right now, folks, hit a high out here today of 85.61. This is the dollar index. Off of that high, however, someone just hit this baby with 1,400 contracts. Now, that doesn't seem like a lot, but that's a lot in the context of what we're trading because we're only done 13,000 thus far. You know, we'll see where this shakes out. It's extended. There's no doubt about that. The longer-term basis, King Dollar wants to get up to 89. That's the reality. A shorter term, it's like, okay, it's ready for a break. If we go over to gold, if we take a look at gold, this is what you have with gold. Gold contract this morning has taken out the lows of Monday, and bottom line is that rejected that lower price, and it looks like we'll find out what's going to have lighter volume. It's going to be a close call because we're only dealing at 9 o'clock in the morning, of course, and the last low out here was the 1208.80. We get to 1206.60. We're at 1210.80 right now. When we look around overseas, what we had last night in Asia, you had basically a flat market. Shanghai was flat. You had the Hang Seng was up 1.6%. Nikkei was up 1.2%. Europe right now, the way Europe is setting up, we have the CAT flat. The DAX is let's see, the DAX is up. Where is he? Yeah, they're all flat. That's the real bottom line. You know, this is going to be, no doubt, we had volatility in the marketplace. The currencies are putting huge volatility into the marketplace, and I expect they're going to get even more volatile. The markets are going to get more volatile. Why? When the euro goes from 139 to 127, which it has, when the dollar basically goes just the opposite way, you have these large multinationals that are going to have huge problems on their hands. Why? Because it's the changing of currency back into the country that they're reporting in. It turns into huge problems. Now, don't forget, this is the last day, folks, that you can sign up for the Nadex virtual trading contest. We're giving away $10,000 next week in cash. You have until noontime today. It's free to sign up. It's a dynamic platform #1. You can be out there trading it each and every day. When you sign up, what will end up happening is that you're getting the Tiger's Den, as well as tonight at 6 o'clock, I'm going to be doing a workshop for an hour, walking you through a couple different strategies that you can be in there trading. The contest will start Sunday night, but realistically, you know, there's currency pairs that trade Sunday night. Realistically, figure Monday morning, Monday through Friday of next week. First place is $3,000. Second prize is $1,500. Third is $750. We have 2 at $500, and then 6 through 10 is $250. And then each and every trading day, we're going to be giving away 5 separate $100 cash prizes, plus a copy of The Art of Time in the Trade, just for trading. Don't forget, at TFNN, we start our day off each and every day with our man, Mr. John Logan. That's 8 a.m. 8 a.m. to 6 p.m. each and every trading day. You can get all that live content right on your cell phone at tfnn.mobi. If you'd like to get TigerTV, just go to tfnn.com. You'll see the TV up on the right-hand side. Just hit it. You get TigerTV, as well as the audio and the video. Let's go over to our man, Mr. John Logan. John, what's going on?
Hey, Tommy. Man, what a bounce in the S&Ps, huh?
Oh man, I'm telling you. You know
what? That's what stops are for. That's what stops are for.
Hey, listen, there's no doubt, man. There's no doubt. There's no doubt. What I can tell you here. So if we go look at these S&Ps, so check this out, folks. Okay, what I like about this market right now, though, this is acting just as it basically should be. I know that sounds bizarre, folks, okay? But what you have is this. This bounce yesterday brings you right up to ice. Well, it's a little past ice. Ice is actually ice was 1988. 1988? I think it's... Yeah, 1988, okay? And, we got up to a price point of 1992. You did it. You were coming into, this is intraday I'm talking. You had 65,000 contracts, folks, and we got into that with 17,000, So that says that, okay, that's where your counter trend bounce comes in. It loves doing that, and I suspect we're going to be right back down the other side. And when I say the other side, the first place that this will come into, folks, is 1976, and that's 9 points down from where we are right now. And the ironic part about it is that the...
Your numbers are coinciding exactly with the ones I'm looking at, by the way.
Isn't that crazy? That's pretty
crazy. That is very cool. Yeah, I mean, the market breadth is still negative, by the way. So I talked this morning, Tom. Like, you know what? It's okay not to be. It's okay not to catch every bounce.
Right.
Talked about picking a battle 76, 77, 78 yesterday.
Yes.
And, dims the brakes, didn't work out. The theme of trading, by the way, is lose a little, lose a little, lose a little, make a lot.
Sure.
We hit the euro perfect, and that was kind of, let's make 100 pips on the euro while we get clipped for about 4 points on the S&Ps. I'll take that any day.
Right.
And that's the way the risk reward scenario works out. Any good trader, if you find any trader that's done some lucky things, he won't be doing this. But any good trader who goes in there and grinds it out every day, that's the mechanism that you use. And this 1988 number that you're talking about is really weird because I was saying, you know what, market breadth is still negative. Even the 240s are negative. 60s changed a little bit.
Okay.
But the dailies haven't really moved. So that 1988 area is like, okay, we're kind of far, messing around above there. 94.50 is kind of Custer's last stance, by the way. If we get above there, it's kind of
that's cool. That's good, but that's good to know. That's because that's shot money. That's shot money, man. Yeah.
Reassess everything above there, but because we probably will go to 2003, 2005 if we breach there. But 88 is where we talked about. We're trying to find a place to pick a battle.
Right.
We made some good points from 1994.50 down to like 1970, by the way.
Yes.
Based on that concept, but right now 88's kind of the area of contention for me right now.
Yeah, no,
and 76 is that area that you just it's exactly the same as what you just talked about. I'm showing it on the screen right now. It's crazy.
Oh, cool. Let me see this. Okay, so it is crazy because we know what happens, man. I'll tell you, folks. This is what is so cool about trading in general, is that when you get fast markets, okay, which we have right now, it seems that it's not that the controls get taken off, but they love bouncing to these numbers. And, John, a lot of the Tigers know this, one of the largest trading days I ever had, profit-wise, right, it was definitely during, the downdraft in 2008. And what it was, folks, though, check this out. What it was is that the market was actually flat at the end of the day. And I was done trading at 11:15 in the morning because what the market had done is that it just kept bouncing off these numbers. And, of course, what happens, and we were far enough into the downdraft that, it's just strictly day trades, but you were parlaying, okay? So what ends up happening is that you're in and out. And I knew I was going to be in and out in 10, 15 minutes, but I just cracked up. And that's how this market is trading right now. Do you know what I mean? That you definitely want fast fingers, folks. But what happens is if you have your parameters set up, it's there, which is just like, you know, I'm trying not to get excited, but I am excited, you know? I'm serious, man. It's wicked. It's wicked, man. Because what you can't do, folks, is get excited. Because on both sides of it, whether you're making or losing, what you want to do is just, you know, be a little machine here. And what does happen with that signal box, which is really cool, is that that helps the machine aspect of the trading deal, you know? Because, you know, many times, you know that one of the sayings I have is there's always another trade. Well, if you keep that in mind, it's very real, number one, and it's very easy to make anything back. That's the reality. It's not easy if, in fact, you don't take stops, though. You know, that's.
Oh my God! Yeah, I mean, listen. You cannot stress that enough. I mean, I hate to be fatalistic all the time about stops, but I'm telling you, you know what? I've walked away from this terminal before.
Yeah.
To take a piss break, like for 3 minutes, and not have to stop in, and the bonds go up like 4 handles because of something Bernanke said. You know, I mean, you got to have them in.
Listen,
all the time.
I will never forget this, and this was a huge lesson, and it's a lesson, folks, in the context of if you are doing a lot of trades. And like 96, I think, or 94 or 95, I was trading at home, and I was making a peanut butter and jelly sandwich for my kids, right? And I walked upstairs, I walked back downstairs, and I blew 15 grand. You stay right there, folks. John Logan, Tom O'Brien, we're coming right back. The S&P is down 5.5, Nasdaq's off 13. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. John Logan, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you got the E-minis off 5.5, Nasdaq's off 12. And, you know, inside that NASDAQ, folks, you have two different issues. The biggest one is, well, they're both the same, really, if that's going to go higher or lower. And Apple's the first one. Apple closed yesterday at 101.75, and the benchmark is 100.72. And Apple's going to open about 100.70. So that's going to be intriguing watching how this baby shakes out, because it has stayed over that high for 5 weeks. No juice, but the bottom line is over the high. You get underneath that 100.72 on a weekly basis, and see you don't want to be you. The other issue inside the NDX and the NASDAQ are the biotechs. The IBB did get topside yesterday, and with a bit of force, by the way, okay? You did 1 million shares. You're coming into 1 million shares, and you had that wide price spread. So that is what is holding the NASDAQ up at this particular point, and we'll see. You know, the biotechs are so cool, John, because they trade with velocity, man, whether they're going up or down. So it's pretty intense, man, no doubt.
Oh my goodness.
Yeah.
Was that number you just said on Apple 172?
It's 100.72, yes.
You know what I've got? I've got 107.70. And that's kind of where the breakdown, yeah, you're right, man. I mean, I think pre-market we're trading right there too, if I'm not mistaken. Let me see.
So yeah, we are. You know, so check this out. You know what's insane? So John, this is a crazy story, right? But okay. What happens, folks, is that because trading is visual, right? Before I even knew like what Fibonacci was, right? I'll never forget this, because what happens, folks, is that when you get a picture of something that I've been, as John has and a lot of you guys, I've been in front of a screen for a long time. And and what happens at the beginning of your career, you're in front of it even longer, meaning probably 14 hours a day, you know.
Yeah.
That's just how it is, you know what I mean? Yes. And what happens is that I remember I had this guy come up behind me one day, right? And he says to me, "Oh, you're trading these fib numbers, huh?" And I looked at him. I says, "I don't even know what a fib number is, man." No, this is a trip, man. Because what happens is that some of these guys really thought they knew me well, right? You know what I mean? And they're saying, yeah. "I don't believe that you're trading these things. You don't even know what they are." So,
hey, Tom, I got a question for you.
Yeah.
When do I get to not stay in front of the screen 14 hours a day? Because I'm kind of still doing it.
Then, okay, you need a life. No, this is what okay. This is what happens.
I'm just kidding. I'm just kidding. I'm not in front of it.
Anyway, the point of this theory, folks, goes like this. There's something about math, number one, and the visualization, you know, like when you kind of put this together, and I just realized over the course of so many years, it's like the markets do the same thing, but not the same thing, folks, okay? So there's these lines in the sand, as John was talking with the DMZ and all that, and what I loved, when I wrote the first book, what I realized that what I like to do first is that speculate where I think it's going, and then do the math after it. And what happens happens is that when you're doing this for a long period of time, most of the time you get pretty close to that, folks, which is, and I'm not suggesting you do that. I'm suggesting more so whether you're using the art of time of the trade charts or you're using the signal box, that's what you want to do, because there's something behind those numbers, and we'd all love to know what it is, okay? You know, it's probably life, but the reality is that those numbers work. They work when you're in the probability business. That's the bottom line, folks, you know. But,
yeah, and they work from a standpoint, too, you know, from, like, we talked about that bell curve thing that you kind of, like, said you finally, like, oh, yeah, I get it now. You remember that?
Right.
But when we get outside that statistical high sampling area, wacky things are going to happen. People are going to throw up. They're going to get out of the market. They're going to change positions. And those inflection points that you're talking about, that's in essence exactly everything you're saying. Is like people are going to change tone around those areas and possibly change tone. So that's the areas you want to more than likely kind of wait and keep the powder dry, in my opinion, until you get to those areas where those are going to be like, hey, I might be wrong here, but at least I won't waste a lot of money because I've waited to kind of pick the battle there.
Well, there's no doubt. And I'll give you a great example, folks, okay, is that the, not yesterday, but at the close on Tuesday, okay, what you had, and this is, you had someone throw a huge amount of contracts into that close, and guess what? That's not you, I, John, or someone else. That is a large broker-dealer. That's a bank throwing 200,000 contracts into the close. So even at the bounce yesterday, I says, okay, if it only can go to ice, that's all right. What I expect you're going to see out here, it could be at the close today, they're going to whack it again. That money is out there. You stay right there. John, Logan, Tom O'Brien, we want to hear from you. Opening bell's coming right up, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Right now, we get the Dow down 49, Nasdaq off 15, S&Ps are off 6.5. You have gold down 8.10, silver is off 28. Bonds, you get the 10-year up 7. Ticks, 30-year is up 19, and King Dollar, she's hanging up there at 340 ticks up. Euro is down 61. Got our man, Mr. John Logan. We're talking markets out here, and no doubt currencies are a trip in itself. So why don't we go through, what would be cool, John, is that, as we did yesterday, we'll go through those daily breaths out here, with the signal box and see where we're standing.
Well, let's do that. But let's also talk about your great insight here on Apple. We've gapped down and we're trading about 40, 50 cents below that inflection point that you just spoke of, 170.72. And that, Apple's over 13% of the NASDAQ, and we always talk about those market leaders. You got to keep your eye on them if you're going to trade these futures.
Yes.
And that in itself is pretty damning on the whole situation. It's a very big component. I think it's 3.5% of the S&P 500 or something?
Yeah, that's correct. And what you do have, now this is how this shakes out right now, folks. So we're at 100.54, okay? If this can't get back inside 100.69, you will get down to, yeah, that's cool. You get down to 98 pretty quickly, which is pretty cool. So, because this is definitely one of those DMZs. It gapped away, gapped down.
Yeah.
It's gapped away. It has the volume right now on the way down. And so now it's just a matter, can it get back inside its range? And the higher range, it's a heads up. Is the higher range the spike at 105.8? To be conservative, it would be really 100.68.
Well, the good news, is you don't have to hope and dream. I mean, you've got some levels, so to speak, to kind of like regulate this so-called trade with. That's the beauty of it.
No, there's no doubt. If we go over to the IBB, because the IBB is crucial inside the Index 100, folks, okay? The IBB, and this has always been a sleeper, and it's GILD. Gilead is a large weighting structure inside this NASDAQ NDX 100. You got to remember, so the NDX 100 is a modified weighted index. So we're at 110.36 right now. 110.64 is the high. Your benchmark's 14 million. So it's going to go for it. So what's cool here is that Gilead will tell you today whether the biotechs want continual price. The second largest weighting is Celgene. So Celgene goes topside yesterday. It has, what's that, 56 million? Oh, let me see. 5.8 million. That was going into 5.6 million. So Celgene will also tell you can just take those two, Celgene and Gilead, and say, okay, what are you doing? And if Celgene closes under 96.30 today and has lighter volume, and Gilead also fails at the high, well, then you get action in the IBB. So it's going to be interesting watching this whole baby shake out, no doubt. And, of course, Apple is the kicker. What you have with Apple, there's not a fund, folks, that doesn't own Apple, number one. There's not a person that probably doesn't own Apple. If Apple can't handle the higher price, you'll see some repercussions of that, particularly in the NDX 100. If we go over and we take a look at the 3Qs for a second, there's not it's a sideways move right now in the 3Qs. So there's no doubt we had the volatility, but I like how this market's trading. And if I like how this market's trading, and what I'm talking about, folks, is that that is me coming out of the bear cave again. I had to put my jacket on a couple times yesterday, John. Actually, 2 days ago, folks, I'm sure if you were watching Tiger TV, I actually did have a jacket on because it was like 60 degrees in our office. We're in a Class A building, but for some reason, if it gets cloudy outside, this guy doesn't turn off the air conditioner, and it's like insanity. So,
yeah, your office it doesn't feel like Clearwater, Florida. It feels like Anchorage, Alaska.
Doesn't it? It really does.
Oh, my God. Yeah, it's crazy.
It really does.
We asked about the market breadth a while ago, and we had some folks make a comment about the NASDAQ in there, that a lot of the NASDAQ stocks were up yesterday. But, I'm looking at the NASDAQ stocks. I think only 21 of the NASDAQ stocks are trading above the fair auction, or trading above profiles, and the rest of them were either within or below. So that's the NASDAQ story. But the S&P breadth, all things considered, tomorrow's going to be an interesting day because we're very close to having a weekly breadth crossover. And this is a very strong signal when that happens.
Yes.
But we've got some really weighted downward type negative breadth on the daily still that really haven't changed a lot. Even in yesterday's rally, I think this disparity was still around 30% spread between the above and below. But we've got the 240s sitting there kind of staying on course here, and then the 60s are still a little negative. I just think the risk is to get long here. We always try to, me and you, where's the risk, and try to eliminate one side of the marketplace. I've just completely eliminated the long side of the marketplace for me right now. Based on
so watch. And what the comment was, folks, is that 90% of the stocks in the NASDAQ were up. And I don't know if that's a fact or not, okay? But what I do know is that what I love doing, and the NDX was up, okay? But what I love doing is this, is that and we'll do it right now. So when you take when you get the leading stocks up and the ones that are down, right? What happens is this, is that as a stock has got killed, folks, okay, they love to dead cat bounce. So on a market, now you can do this as a bull or a bear. We'll do it both ways so you can understand the concept here and the theory. What happens is that, now in this particular case, I have the NDX 100 up, okay? And you're saying, okay, what are the biggest ones on the way down? Well, today you got, Wynn Resorts is down 276. Apple is down $1.30. You have Xilinx down 49. You got Illumina down 167. Now Illumina. Oh, hey, check this out. Hold on. We got to go to Illumina first, because inside the IBB, Illumina has shown that it likes leading. It's really weird, man. And this is something that you just catch on to if you're trading that IBB a lot. Okay. And the Illumina is only 3.7% of the IBB. But let me go over to the GILD for a second, because what happens is that these large money managers own the same equities, inside of that. Okay, so that's not ready to croak yet, but that's a heads up in general that the IBB could very well be cracking. Okay, so when you look at the aspect is that, okay, where are we going? How are we going there? What tends to happen, now this is sweet, man, okay, is that you take the winning stocks, okay, and say, okay, what are the winning stocks doing? So you get Broadcom up 60 cents, Gilead is up 158, Vodafone is up 27, and you got Micron Tech up 23. Well, Micron Tech's been on the way up, no doubt. Vodafone, let's go take a look at Vodafone. That's a dead cat bounce, okay, so that that is a, that doesn't mean a thing to me, basically, okay? Gilead's definitely been going up, and I think Broadcom probably has been going up too. So, yeah, Broadcom has. So what you do have here is this, is that you have 3 of the 4 leading stocks in the NDX 100. Those are real, okay? One of them's not. And that's basically good for the NDX 100. That's how that shakes out. We know that Apple's getting, croaked, and I knew I should have bought those puts yesterday on Apple, man, on the newsletter. I just knew it. Well, you know what you had, folks, is this, is that you had the aspect that Apple was just teetering at this 100.70, but what I also, and I brought this up, I think, on the morning show, I definitely brought it up at the 3 o'clock show, is that I knew personally from a fact that they were, the iOS 8 system, folks, was, if you did the upgrade, a lot of people you couldn't get self-service anymore. It's heavier than that, because what had ended up happening, which they buried, is that if you did the upgrade last week, now I'm not talking about the one they did yesterday, they took the one last week, it was wiping people's phones out, period. You had to go back to the original settings. And if you have to go back to the original settings, that drives people out of their mind, because if you haven't backed it up, you lose all your pictures, okay? And if you know anything about the internet and phones right now, all it's about is pictures and selfies. I mean, that's the reality, okay? So
Yeah.
Well, we got action here, though, man. Hey. We got action downtown. It's a beautiful thing.
Yeah, we got the S&Ps coming off, and again, you could look at it in a broad sense if you kind of just scratched everything we just talked about and looked at the technicals. You could look at this as kind of we're rattling around at the top again and consolidating, maybe to move higher. But because of if you just kind of step back and forget all the stuff going on in the world and just look at the classical technical analysis type move here.
Yes.
But everything we just talked about, I'm just really not a fan of going long this and looking for short opportunities as you are right now. Are you looking at the 10-year? That thing's that's why it's just scary to short that thing ever, because the market's on all-time highs. The notes, as we know, they're sitting on the trigger constantly on that thing, and they tell you, hey, we're gonna monitor these things really close. You got Europe ready to do unconventional things or whatever they said they were going to do, and the market pulls back off of all-time highs like 40, 50 points. I'm still thinking these things could just power up, and that's why it's we had a kind of a long opportunity on these around 124.03. If we just kind of waited until we got back above that area, 124.3, 124.4, now we're trading 124.18.5 now. So that was kind of the wait patiently kind of move on that.
It's amazing. Folks, this is sick. I mean, because that I'm in the S&Ps, I'm a bear for a long time. In gold, even though gold's down, I'm a bull right now. And the bonds, I'm a bull. So yesterday, inside the building that we're in, folks, so picture this. The building that we're in has Morgan Stanley, Merrill Lynch, and another couple of large funds. So we're in the elevator, and we all know each other. So I'm in the elevator yesterday, and I'm coming upstairs, right? And so the manager of Morgan Stanley says to me, he says, well, what do you think about those bonds? I says, man, I'm a bond bull. He says, man, how do you get in front of it? He says, I can't believe that bonds just keep going up. And I totally understand what he said. And I said, listen, man, I understand what you're saying. I understand how bizarre it is, okay? But the reality, is technically they want to go up. And fundamentally, I absolutely understand it. Technically, I have a hard time understanding it, because it's like, oh, my God, rates are going to get down that dramatically. But the more that you keep looking at it, meaning on a fundamental basis that, hey, the dollar's going up. So check this out. John, what's amazing? So check it out. What
politician is going to actually raise rates? Well, they're the ones controlling Yellen. You know what I mean? What are they going to say? Hey, let's raise rates. That's not going to happen.
No, it's not. And the hypocrisy inside the financial business anyway is there, okay?
Yeah.
The last thing,
yes.
They'll yell and scream all day long, folks, that, oh, we think we should do this, we think we should do that. Let me tell you something, man. You know what's amazing? You don't hear anymore. Do you remember after the debacle on the way down? You had financial guys that I basically were saying, this is not going to work, this is not going to work. You don't hear them say that, oh, this worked now. What you hear is that zero. They say nothing. Because of the fact they know that, free money's free money, okay? But it's a worldwide phenomenon. It's just not the United States, and that's why I think they're going to be low. I mean, this is a worldwide deal, and the rest of the world is, in trouble. Period.
They're watching, and they're always a couple of years behind the curve of what we're doing. And now that they've learned that, you know what? Wow, they've decided that they're going to control this to the point to ramp up things the way they want them to. And now the politicians, I hate to get off on some kind of conspiracy thing today, but the politicians, our president and whatever, I mean, it's almost like they've been enabled to now push this agenda even farther forward on this level, and this is going to end badly at some point.
That's a great point, because they have been enabled. Yeah, that's a great point. Yeah, no doubt.
They've been enabled. I mean, they almost feel entitled to keep, now that it's almost like legally okay for them to keep pressing it this way. So, who in the world right now who wants to get reelected? I mean, it's like some kind of self-fulfilling crazy policy. It's like, oh no, I'm gonna raise rates because this is not right. Of course it's not right. But are they going to say that?
Yeah.
Yeah. I mean, it's like there's so many weird things that are going on with this right now.
And the gold's rejecting lower price. Going to have lighter volume. Gold's down 410 right now. It's been as low as 1206. You're at 1216. And I suspect, there we go. Here we go. Oh, baby.
Yeah.
See ya. Don't want to be ya.
We're at the target you just talked about, 76, 77, 78 now.
They're going to whack this, and this goes back to...
This is going to get ugly. This is going to get real ugly.
Or it's beautiful. So when we take a look at it now, so watch this, folks. Okay, so someone just whacked this again. Okay, and this is the identification. You never know who this is, folks. Okay, but what you have is this: is that when I brought up a little bit earlier when John and I were talking, the same trader or fund that whacked this at the close of 200,000 contracts just whacked it again. They're going to bring this all the way back down. This is big money, folks. Getting out. John Logan, Tom O'Brien, you stay right there. We're coming right back. Dow's down 92, NASDAQ off 34, S&Ps are off 12.5. We're going to be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. John Logan, Tom O'Brien. We appreciate you growling and prowling with us. Right now, you get the Dow off 105, Nasdaq's down 38, S&Ps are off 14, and get ready for some destruction, folks, because this is the classic that you go down, you go back up, and, you know, the bears give it up, the bulls jump in, and the people that were bearish can get bullish and all the above, and then see ya, don't want to be ya. This baby's going to go not only right after this low. I expect when we get down here, and what I'm talking about is, you know, you're down 14 points, but we're talking another 8 points, so that'll get you down 22. It's going to get down to test that level. If you trade there for 10, 15 minutes on a sideways basis, they'll break that baby out. You know, the IBB is starting to crack. It hasn't cracked yet. It's there. Apple's cracked. Apple, it looks to me like it's got some action, and we're talking about big action on the downside. So
we've met this 76 target that you talked about, and it would be really cool if we just rattled around right above this and maybe kind of consolidated around that 76. Maybe you know, we got to, you know, trading, you know, the markets are going to go up and down, but like if we could just kind of gyrate around here a little bit and then we shoot for 72.
That's right.
Then it's over after that.
And what you're hearing there, folks, is that that's my term of building cause. So what happens is that you got to remember the energy, the market's all energy. You know, energy on the way up, energy on the way down. And when that energy gets expended, you have to build cause for the next move, okay?
Yep.
And you're going to be able to tell what type of energy you have, okay? And, you know, right now, so picture this for a second too, folks, okay? That picture that you're the trader that basically hit the market at 1981 at 1550 on the 23rd, okay? You hit it, market goes all the way back topside. It's okay, great. You got to remember something. Most of these guys have unlimited money because of the fiat system. That's how this thing shakes out. They want to make money, and they'll stay tight with their stops. It's not like it's unlimited. But the bottom line is that they have a strategy. As they start cracking this morning, what ends up happening, they hit it again at 1986, okay? And it worked. Once it works there, they're setting up their next trade right now. That's what they're doing. In the next trade, they'll, I suspect, lay off for an hour, 2 hours, let it bounce around a little, build up some energy, and they're going to try to blow out that low, because if they blow out that low, just as John said, they know that then there's some real destruction in the marketplace. You know, and that's what trading's about. The trading is about either blowing out highs or blowing out lows, and that's it. When you bring it down to the simple context, that's all it's about. You know, which I know sounds insane, folks, but that's all it is, you know, because it's certainly not real. You know, the money's real, but the aspect of where you want to push the market around, and operators can push the market around, and that's exactly what they're doing, you know. So.
Tell you what, tomorrow's going to be the telltale sign, because if those weekly crossovers happen and we're sitting below here, I mean, we could be in for a decent little ride down. Again, stops are in order always, but it's you know, it's you know, this, you know, things don't happen in one day. You know,
no, they don't.
We've got.
And in the context, folks, this is something to wrap your head around. Is that when I was bringing up ExxonMobil yesterday, so February 5th is your benchmark. ExxonMobil is almost at February 5th at that benchmark. Okay, so February 5th, the low of February 5th in Exxon is 91.70. The high is 96. We're already into it. We're at 95. And that aspect, that's where you better make sure that you have stops if you're long. Because inside the S&P, you're talking about 1775 and 1737, or at 1990. Hey, John, thanks so much, man. It's always a pleasure.
Got it. Yeah, it's been my favorite thing to do all day is to get on your show.
Yeah, too much. You stay right there, folks. Our man Dave White's coming up next, then Basil, Darryl Martin. Don't forget about the Nadex, folks. You only have 3 more hours. Sign it up, baby. Win some money.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.